In October 2024, inflation in the Eurozone surged to 2%, marking a significant shift in the economic landscape. While the figure itself is not extraordinary when compared to historical standards, it signals a departure from the low inflation rates that have dominated recent years. Let's break down what this means for the average consumer, businesses, and the broader economy. Now, inflation is essentially the rate at which prices for goods and services rise. A 2% inflation rate is typically considered manageable by most central banks, particularly the European Central Bank, ECB, which has been aiming to keep inflation around that level. The tricky part, however, is that this sudden rise comes after a prolonged period of relatively low inflation, giving the impression that prices had been under control. But much like that unexpected hike in your energy bill after the summer months, it can take consumers by surprise. So, why is inflation surging now? The short answer is a combination of factors: energy prices, supply chain disruptions, and wages. You've probably noticed how the cost of energy has been creeping up again, right? Gas, electricity, those prices are back on the rise, and that's directly linked to inflation. Now let's talk about wages for a second. Many countries in the Eurozone have seen wage growth as workers demand higher pay to keep up with rising costs. While this sounds great for workers, it can create a feedback loop. But here's where it gets interesting. A 2% inflation rate is the threshold the European Central Bank targets. They've been really clear about wanting to keep inflation under control while supporting economic growth. When inflation rises above this level, like it has in October, it often triggers concern. For the average consumer, this 2% surge in inflation means that your day-to-day expenses might start to feel a bit heavier. You're already noticing it in the price of groceries, gas, and other essentials. This increase in prices can erode your purchasing power, meaning you can't get as much for the same amount of money. For businesses, this surge in inflation creates a bit of a headache. On one hand, they have to deal with higher production costs. On the other hand, if they raise prices too much, they risk losing customers who are already feeling the pinch from rising prices elsewhere. This inflation spike also puts pressure on the European Central Bank. They've been taking a cautious approach, raising interest rates gradually over the last couple of years to bring inflation under control without stalling economic growth. But as inflation rises above their target, they'll have to decide whether to raise rates more aggressively, which could have knock-on effects across the entire economy. Higher interest rates could mean higher mortgage payments for homeowners, more expensive car loans, and costlier business financing. It's a bit like a domino effect. One move leads to another. Now, let's zoom out a bit and think about what this all means for the Eurozone economy as a whole. The 2% inflation rate, while relatively manageable, signals a shift from the low inflation environment we've been in for a while. The problem is that it comes at a time when the economy is still in recovery from the pandemic, and the global economy remains uncertain. On one hand, the Eurozone economy has been growing, but on the other hand, these higher inflation rates could slow down that growth, especially if consumer confidence starts to waver. For investors, the 2% inflation figure is something to watch closely. If the ECB continues raising interest rates, bond yields could rise, making bonds a more attractive investment. On the other hand, if inflation remains stubbornly high and growth slows, stock markets could become volatile, and investors might look for safer places to park their money. You know the old saying, when inflation rises, the value of cash falls. This could lead to changes in investment strategies across the board. At the end of the day, inflation at 2% in the Eurozone isn't necessarily catastrophic. In fact, it's still within the ECB's target range. But it's a reminder that inflation is a living, breathing thing, and it doesn't just stay at one level forever. It can creep up when we least expect it, and that means we all need to stay vigilant about how it affects our wallets, our businesses, and the broader economy. Thanks for sticking with me through this breakdown of the Eurozone's inflation surge. I know it's not the most thrilling topic, but it's one that impacts all of us, whether we realize it or not. If you've got any thoughts on how inflation has been affecting you, drop them in the comments below. Let's talk about it. Don't forget to like, share, and subscribe if you found this video helpful. And as always, keep an eye on the economy, because as we've learned today, it can change faster than you think.